Hi everyone, today we're talking about 5 stocks to watch next week. 5 of these companies are going to be reporting earnings next week, and it'll be really interesting to see what happens to these stocks after they report earnings. It was a really busy last week for earnings, but this week coming up is also going to be a pretty busy one. So some really interesting names that are going to be reporting earnings. And before we get stuck into the video, guys, if you could smash that like button, the support has been amazing, and hitting that like button really helps the support on the channel as well. So thank you so much for that. And we'll get stuck into some of the stocks to watch next week. So before I get the 5 stocks, there is some honourable mentions. So there is Activision and EA, 2 gaming companies. It'd be interesting to see how well they've been able to capitalise on the kind of lockdown and how they've done well with a lot of the games. We've got Ferrari. I will also be making a video on Aston Martin some point over the next 2 weeks. I know you guys have been asking for that one, but I love Ferrari. It's a company I used to own. I made 140% profit on it. We have Pinterest, another one of my companies, reporting earnings. Hopefully they'll do really well and capitalise on this kind of lockdown as well. We've got Beyond Meat, one stock I were really close to buying at one point. We'll see how they're able to do. Dropbox, another one of my companies as well. It'll be interesting to see how they've managed to do, how much they kind of capitalised on that work at home kind of explosion that we've seen with a lot of people forced to not go into the offices and do a lot of work at home. We'll see how they've managed to do as well. So I've got 2 companies there that I own reporting earnings. But the 5 main stocks, we're going to start off with number 1, which is going to be Square. Square is a company that I used to hold in 2017, and I held it to about 2018, so I held it for about a 2-year span. I made a good 140% on this company before I sold out, around about the mid $40 range, and I just sold that because the valuation for me got too high at that sort of point. I was going to make a full video on Square, but with them reporting earnings, it's a bit stupid to do a video because with earnings the video can go out of date so quick. Like, I'm talking about a company, next thing I know, like a day later, like the earnings come out and they say, oh, now we're going to do this. It's like, right, that video that I just did is just absolutely worthless. So I'm not going to make a video on Square with earnings coming up. I might do it about a week, 2 weeks after earnings. But at the moment it is a $60 stock, and I would say that it is slightly a bit of an expensive stock. I would be more interested in buying this stock somewhere around the $40, $50 mark, but it is a fantastic company, a company that I like. And you guys know I really love my payment companies. I love my MasterCard, I love my Visa. Visa is the company that I own, but with this kind of space that Square and PayPal are in, those are 2 companies that I would not mind having another payment company in my portfolio, especially a company like Square, because a lot of Square's revenue comes from the US. It is not very much international based yet, and with it being international based, that will really help its revenue grow. It also just got official licensing to become a bank as well. So with Square, I really like this payment because it has the kind of payment industry, it has its Cash App. It's now looking at going into the banking industry as well. So it's going to have 3 big income streams right there. So with Square, it's a company that I probably like a little bit more than PayPal right now. I do like PayPal still. I wouldn't mind holding both of them. I would say Square is probably more closer to the stock that I would own at the sort of prices, like say under $50 for me. I'd definitely think about picking this one up again. Number 2 is PayPal. So it seems sensible to jump to one of its competitors. PayPal reporting earnings as well on Wednesday PM, so they're both reporting earnings pretty much after the close. PayPal, same again, it is kind of capitalizing on that payment industry as well. It has massive growth, a little bit more international based, a little bit more of a bigger company as well. PayPal is another company that I wouldn't mind holding somewhere around, I would say under $90 would be perfect. It's a company that I held. I think I actually sold my Square shares and then I bought my PayPal shares with a profit from Square, and then ended up selling out of PayPal somewhere around the $110 range. I think it was somewhere around 2018 that I sold out of that. And the only reason I ever sold out of PayPal is because I was switching broker and I didn't want to pay the fees to transfer it to another broker, and I didn't want to carry on using that broker because I kind of had a bit of a heated debate over emails with them. So I was like, right, I'm not using your services anymore, and I sold all my stocks, and PayPal was one, and it was just too expensive to kind of buy back in. And I think that was around about 2018, and then eventually I ended up switching to Giro at the time, which I use now, and I still use Trading 212 now. So PayPal is another company that I wouldn't mind buying at the right sort of prices. Number 3 is Disney, a company that I own, and it'll be very interesting to see how much money it's burning through. Obviously, it's not got its movies anymore, it's not got its parks open. They're just starting to reopen in China. There's potential that they'll start opening up in Europe, but overall it'll be interesting to see with Disney how much money is the company losing, and also how good are them Disney Plus numbers. I'm really hoping for some good numbers. We knew it hit 50 million only about a month ago, so if we see Disney Plus trying to push towards 60-70 million subscribers, that'll be really fantastic, because like I say, for Netflix, it took Netflix to get to that amount of subscriber amount in like 17 years. So for Disney Plus to do that under a year would be fantastic if it got kind of to the 60-70 million mark subscribers. So it's kind of like all eyes on them right now, and that's probably the company that I'm most eager waiting for right now as a company that I own. I'm really excited to see what these Disney Plus numbers are going to be. So Disney is definitely one I'm going to watch, and they're reporting earnings on Tuesday before they open. Number 4 is Uber, and Uber is a stock that I own. It's a stock that I tend to buy under $30. I've been lucky enough to get it under $25. I think I got it at $22 and added in during this last correction. So Uber is a company that I own. Obviously, it's going to be a bit of a bad one for them. We know they weren't going to make money. We know that revenue is going to get hit. It's just a question of how bad it's going to be getting hit. So we'll see how Uber do on Thursday. They're reporting Thursday after the close. So I think if any of them on this list are going to have a bad earnings, I think it could be Uber that moves down the most. I'm a little bit nervous for that one, I'm not going to lie. So Uber's one that I own, and we'll see how they manage to do. The only thing that I'm kind of hoping for Uber is that Uber Eats segment pulls through for them and gives them quite a good earnings. But like I say, I'm a little bit nervous for this one, I'm not going to lie. I don't know why, because Uber Eats should kind of make up a lot of the drop off in the kind of ride business. We'll see. So I'll see what happens with Uber. But I don't know why, I'm just a little bit nervous for that one. And number 5 is Shopify. That's reporting earnings Wednesday AM before the open of the stock market on Wednesday. And Shopify is a company that I really like. I think it's a fantastic company, and I'd love to know in the comments if any of you guys got that one down at a cheap valuation. I think right now it is really expensive. You are paying a very big premium for the stock. I can understand why, because the growth on it is fantastic. Very profitable business as well. And with Shopify, it's a company that I looked at owning one time, and I was like, it's a little bit expensive, and that was when it was like $200. And I'm looking out and I go, crap, I should have actually bought it then, but I didn't. And Shopify is a company that if you own, I think it's a fantastic company. Personally, I just can't get into it because of the valuation. For me, it's one of those where it's like Amazon and a Google probably. Maybe not as much Google, definitely Amazon and Tesla right now. Tesla, Amazon and like Shopify are 3 companies that I think are fantastic companies, great investments, but I got to justify my investments by having that kind of reward, and I just think that it's just so expensive. Maybe when it dropped down I could have really bought there, but at the same time it's one of those. I kind of were focusing on companies that I already own, to be fair, but I love Shopify. We'll see how they do. I'm not really sure what will happen with them, because I don't know if e-commerce sales would have dropped off a little bit right now. So we'll see how Shopify do. It's one that I'll keep an eye on, because if it does drop, I mean, it could make an opportunity to get into it, because like I say, it's a company I wouldn't mind owning for sure, because it has such a massive growth future in front of it over the next 5 years. And today, guys, those are the 5 stocks that I'm saying to watch next week. Some other stocks that are really interesting as well, but those are definitely 5 that I'll be keeping an eye on. And let me know in the comment section down below any stocks you guys are looking at. That'll be absolutely amazing. And as always, hit that like button, subscribe, and I'll see you in the next video.